28 years of trader psychology packed into within about 10 or 15 minutes. Hi, it's Charlie. Now, I've been teaching and mentoring traders over the last 20 years now through my trading rooms. And I can tell you with absolute certainty that strategies just don't matter if your mindset isn't right. Now, that may sound provocative, but stick with me here because I'll show you exactly what I mean. So let me start by sharing something quite interesting with you. Did you know that approximately 80 to probably 90% of trading success comes down to psychology? You read any books, any interviews with the likes of market wizards or whatever, all of those top traders historically will always end up talking about psychology. Yes, they have approaches and unique, everyone's got their own DNA on how they want to approach the market, but it's psychology that makes the difference. And yet most traders spend 90% of their time looking for what? The perfect strategy, the perfect indicator, or some magical technical setup that's going to answer all their trading dreams. It's completely upside down. So I'm going to walk you through some major psychological pitfalls that I see traders falling into time and time again, and more importantly, I'll give you some practical ways to address them. Before I go any further though, do check out the link in today's video in the description box, because you can go onto the waiting list for my Elite Trader program as well. Now, at its core, every trading psychology issue comes down to two emotions, two fundamental emotions, and that's greed and fear. That's it. Everything else stems from these two fundamental drivers. So let's start off with greed and let's go through a few examples. Ironically, your desire to make money is often what prevents people from making money. And let's go through a few ways that can manifest itself. Firstly, let's have a look here. We have got over trading. Okay. Actually, it's two overs. Over trading, over leveraging, over lev, and we've also got revenge trading as well. Keep three. That's not revenge, is it? Revenge. There we go. So three key areas. Over trading. This is just three. There's many more, of course. But over trading, so just people getting too excited by trading, especially greed-based traders. They just feel like they want to be in the market, and so they end up just taking too many setups. A lot of the time they're low quality in nature as well, and even though you know you shouldn't take the trade, you still end up hopping in, chasing the market and all of that. Over leveraging, I see this all the time, traders taking too much risk on a single position. So you can, and very often you'll see people go into that modality and they'll trade with risk management for sometimes months on end, doing really well with their risk management, and then they just, I don't know, have a bit of a wobble over a shorter period, start over leveraging, and that's where, especially for newer traders, they're more likely to blow an account on a single over leveraged position. Then we've got revenge trading as well down here. So you lose on one trade or a couple of trades. What do? You immediately jump back in to try and get your money back, so to speak. That's revenge trading. Now, there's nothing wrong with getting back into a setup if it properly resets, but that's not what we're talking about here. We're talking about pure revenge trading. Oh, I had a losing day today. Right, I must make that back tomorrow or the day after or whatever. That type of psychology. Now, the classical solutions that you would get to those sorts of things are, have a trading plan and follow your plan, which is true. So if you have a trading plan, yeah, that's true, and you've got your specific setup that you follow and only follow that. That's the sort of advice you would get if you punched it into a Google search. The reality is a lot deeper than that. We are emotional beings at our very heart. So the real solutions to things like over trading, over leverage, revenge trading come from within. They come from your inner dialogue. So let's go through just an example for all of these. So if you're prone to over trading, you need to start asking yourself key questions. If I take this trade right now, this next trade, and it loses, will I kick myself? You can apply that to over leveraging. If I take this oversized position right now, it may end up becoming profitable and a really nice trade as from a profit perspective, but what if it loses? How much are going to lose? Revenge trading. If I take this trade now and I'm just trying to get back the loss from the last trade and it loses, how much is it going to compound the previous loss? I can't afford to take this type of trade. That's the sort of language that you can put onto post-it notes, stick them to your screen, and they act as an arresting mechanism. So start talking to yourselves. Psychology or psychologists have proven over and again that if people talk out loud, or or even if you do use an inner dialogue, but more especially early on, if you start asking those questions of yourself, much like if I was sat in your office saying to you, why are you about to take that trade right now? You wouldn't do it. So use these tricks of the trade. You see people say, oh yeah, just follow your plan, or turn your screens off and walk away. Yeah, that may work, but you're going to come back to it. So there's much more going on than just follow your plan or whatever. It's much deeper than that. Inner dialogue is what really makes the difference. Now let's have a look at some fear issues. So we've got the fear of being wrong. So too many traders are more concerned about being right than, if anything, than making money. It's all about trying to be right, but that comes from, for many people, some people, this comes from the perspective of ego, but others it comes from the perspective of fear, which is what we're talking about here. So the fear of not being right can make them do things like hold on to losing positions if they don't, and not even use stop losses, because if they don't use a stop loss, then they don't get stopped, do they? So that can be quite a big one. Then you've got the fear of missing out, so FOMO, but again, that's a fear that can be a greed-based thing, but we're putting it under fear for now. So you see the market moving up, and then you jump in. So that can be a greed thing as well. But also, another fear is it manifested that you want to hold on to a trade way beyond where you originally intended to come out. So you had an initial target, and then when the price gets to that target, you don't want to come out anymore through fear of missing out on a bigger profit. But probably the biggest fears are the obvious ones of hesitation on the back of a few losing trades, and then the fear of, I don't want another losing trade, so then you don't take a trade, and then that one becomes a winner and all that type of thing. So how do we overcome some of those fears as I've labelled them? Well, the fear of being wrong, and wanting to be right as much as possible, you have to look at, it's not about win rate, it's about overall profitability. Keep reminding yourself, some of the world's very best fund managers out there have an average win rate of actually about 30%. Keep reminding yourself that it's not about, I'm not saying that retail traders have to have a 30% win rate, but it's not about needing a 90% win rate or anything like that. Just keep reminding yourself it's about risk reward, the reward for the risk employed. And keep reminding yourself of that. When it comes to things like missing out, the fear of missing out, again, remind yourself, if I just jump into this trade right now just because this market's moving and I haven't got a plan, well, what are the consequences of that if it's wrong? It feels like I want to be in right now, but is my risk reward going to be good? All of that sort of stuff. So then you can say, I can't afford to take this jump into this trade right now because my risk reward won't be good enough. All of those sorts of things. And again, if you're holding on to a trade too long, well beyond where your analysis said to come out, then that's another issue. And again, you have to sort of say in your inner dialogue, I can't afford not to bank this profit. So that's now turned upside down to what I was talking about earlier on. but I can't afford not to bank this profit. And it may continue going higher, but that analysis doesn't belong to me. So there you go. All of this stems from inner dialogue. So what else can you do to overcome some of these issues? One of the biggest things is always to lower your risk. One of the things that I constantly find is that traders are trading at too much risk per trade. And even if you're trading at 1% risk, let's say, and you are doing it right, using stop losses, and you're only risking 1%, for many people that may still be too high, and they think, oh no, it's not, but it is. So drop your risk per trade. If you're emotional, then you have to earn the right to trade at 1% risk, let's say. So yeah, drop it to a third or a half and see how your emotions are then, because you may find they're a lot better at that, by dropping your risk per trade. Focus on the process. So measure your success not by your P&L. Leave that to the social media gurus out there. That's not how you measure your success. It's why I rarely talk on my videos on YouTube. Now and again I have to talk about the money, but I don't like doing it because that's focusing people on the wrong things. Now and again I have to do it for a bit of clickbait or whatever, or just to make it tangible as to what goes on in trading. But overall, I measure my success by, am I following my plan? That's it. If I'm following my plan, whether I'm right or wrong on any given trade or series of trades is here nor there. I measure my success on whether I'm following my processes. Now, if you are someone who's still suffering with emotions, you have got that ability to walk away from it for a bit. So by all means, you can step away and take a couple of days off or whatever. The markets aren't really going anywhere away from you. So if you are finding that, it's amazing what 2 days away from the market can do for your emotions. So to conclude, let me be brutally straightforward and transparent with you. I still focus on the psychological aspects of trading, because if I didn't, I would still, even after 28 years of trading, I would then still suffer with the emotions. So it's something that we all have to keep doing over and over again. It's why top flight sports people still have sports psychologists working with them. Even if you're Novak Djokovic or whoever else, one of the top flight golfers or any other tennis player, whatever, they all have psychologists. Why is that? They're brilliant at what they do, but they still need that. And so I, like many traders, even after all these years, still focus on the psychological side of things, just keeping it topped up, all of the inner dialogue. It just becomes a natural thing, but you still have to do it. If I didn't do that, then probably my inner self, the natural human being, would start to feel all those emotions and whatnot again. So it doesn't matter how long you've been trading, you don't just learn it and then put it aside. It's something that walks along with your trading. Okay, so I think I've given you a few tips and tricks there today. If you found this video today valuable, do give the video a like and subscribe to the channel. And I hope this gives you something to think about in your trading journey. Stay disciplined out there, and I'll see you next week.